Hey, Bulls and Bears, back with another dose of economic reality. Things are continuing to trend in the direction that I think most of us here expected. That's more debt for people, rising costs. We're going to talk about the rising prices. The wholesale price index is out. We're going to talk about massive increases in interest rates on credit cards. Wow, it's going to be interesting, folks. So let's go ahead and get started right here. The wholesale price rose 0.3% in November. This is out of CNBC. More than expected. They always say more than expected, right? Why would prices fall right now? Right? Why would prices fall? Is anything being fixed? Anything that's causing this being fixed? A 38% surge in wholesale vegetable prices helped push the food index up by 3.3%, offsetting an identical 3.3% decline in energy costs. Yes, fuel costs are coming down for now. Let's hope they stay down. But something tells me the cuts coming out of OPEC and other uncertainties are going to equal a much higher oil price and higher gas prices here in the coming months. We'll have to see if my prediction comes to fruition or not. I hope it doesn't. I hope I'm wrong. I hope the price crashes, right? It's interesting that we base economic strength on rising prices. Like, how many articles have you seen about how great it is that people have home equity? Great. I love having home equity, except when it's time to pay Uncle Sam, I don't like it so much. I wish my value was a lot lower. You know what I mean? So, sure, if you're selling a home, if you're flipping homes, it's always good to have prices go up. If you're a landlord that's got a lot of properties and you know that people are priced out of homes because they're too expensive and you can raise the rents on them because of that, I guess that's good for you as a landlord, right? So, depends on which direction you're looking at it from. But to most people, home prices are not a good thing. But yet they say home prices coming down is dangerous. It's going to impact the economy. Of course, when people can't borrow much against their homes, when they can't take out these lines of credit and go on shopping sprees, that's going to be a bad thing for the economy, right? The economy is based on consumer debt and spending. And that's why you have to have banks that can loan out just endless amounts of money. There's no reserve requirement. So that is one of the keys to keeping this economy look like it's functioning when really it's not functioning. The debt is unpayable. People are in so much debt they'll never be able to pay it off. And people think that somehow things are going to get better, that instead of going further in debt, that all of a sudden next week or next month or next year they're going to start things. They think, a lot of people think things are going to reverse. Oh, instead of going deeper in debt, all of a sudden, just for no reason, people are going to start paying off debt and saving more money. Folks, it's not going to happen. We're headed into a financial abyss, and people better be ready for what's coming. Let's talk about these credit card interest rates here. Store credit card interest rates hit an average of 30%. And I'll read it to you as it's put out here out of the hedge. There's been a massive surge in credit card usage by households. Of course, we talked about that quite often. Most of us know that. U.S. households, a troubling sign could suggest that in lieu of disposable income, many consumers are forced to max out credit cards to survive because of the inflation storm. A major problem with inflation is that their monthly balances keep rising. Again, what we've been talking about here. As goods become more expensive, but the interest rates also keep going higher. Folks, we have rising interest rates, debt at all-time high levels for most of the population, continuing to go further into debt. Folks, there's going to be a lot of people filing bankruptcy. It's going to be record-breaking. In our last report, we talked about how Jamie Dimon, CEO of Chase, JP Morgan Chase, came out and said that consumers are going to run out of money in the middle of 2023. That's why the title of that last video was "You Have 6 Months." I think he might know a thing or two by looking at checking accounts. He's the CEO there of JP Morgan, so he would likely know a thing or two about the shape of U.S. consumers. Of course, when he makes his speeches, he's not going to go out there and say exactly that, so you kind of have to read between the lines. For those of you that didn't watch that video, maybe go back and check that out, because he sounded the alarm without actually sounding alarming, right? Does that make sense? He sounded the alarm without sounding alarming. So he's not going to go out there and say, people are going broke, there's going to be a bankruptcy tsunami in 2023. He's not going to say that. He said it more tactfully, but we covered it in that last video. And yes, most people in all-time high levels of debt, savings plunging, people accumulating more debt. The rapidness of this increase in debt has never been seen before. This is beyond the financial crisis level. And people think that maybe because the stock market goes up or because the unemployment number that they tell us, which is a fake number, fictitious number, people look at these numbers and they say, oh, everything's fine. People actually believe it. I think most people believe those numbers. Let's go on to some other news here. The affordability of the average home, the unaffordability rather, is at an all-time high. So even though home prices have come down, when you look at the mortgage rates, homes are the most unaffordable now that they've ever been. And that's what I've been warning people about, and I had warned people about, that if home prices come down, your payments are likely still going to go up, because the reason they're coming down is high mortgage rates. So who's in the strongest position now? It's cash buyers. And when home prices correct further, 2023, 2024, 2025, if you can finally get into a home that's low enough in price to where it'll make sense based on the higher mortgage rate, that's, in my opinion, going to be the time to buy. But you're going to be competing with the cash buyers. The big corporations are going to come in. They're going to try to buy up homes. And I think that we're going to see the home ownership rate really take a plunge, really take a dive. And in fact, if you look at where it is now, the home ownership rate hasn't recovered from where it did after the previous housing bubble that went bust. We have more non-owner occupied homes now than we did back then. That means more landlords and more renters versus people that actually own their home, that they live in the home that they own. So we're going to have to see how that plays out. We've got a real estate report coming out either Sunday or Monday, and we're going to put up charts on a lot of cities. And what we're seeing is inventory stopped rising in many cities. So things kind of stalled out here. The housing crash that some people predicted ended up not being a crash here. We only have, a few more weeks left in 2022. So unless something wild happens, I don't think we're going to see that housing market crash that many people have predicted. Let's talk about what's happening down in Nigeria. They're forcing ATM withdrawal limits. And that's going to happen globally. It's coming here to the U.S. They're going to try to get people into this digital dollar system, the central bank digital currency. It's going to be completely controlled. We're headed into a whole new level of control and invasion of your privacy. And if they don't like what you say, they're going to be able to shut off your account. If they don't like what you do, if you unpaid parking ticket, they'll shut off your account. It's going to be a complete nightmare level of control. That's what they're trying to bring in here. So what they're doing in Nigeria is they're trying to get people into this digital system, but the people there aren't really buying it. They want to have more freedom, more privacy, and a lot of people actually went into crypto. Even with what we've seen now with all the risks in crypto and the exchanges, like FTX, for example, people are still, they still feel safer in that than they do this digital currency that they're pushing out in Nigeria. Nigeria has started to limit ATM withdrawals to $45. Wow, that's US dollars. In an effort to force the people there into controlled digital payments. The good news is that Nigerians seem to get it when it comes to not wanting to be subject to financial enslavement. And this is out of shtf.com. Very good website, by the way. Wow, folks. So things are headed down the path that we expect here. We've got the wholesale price unexpectedly rose, as they say. We've got the consumer price index coming out in just a few days. We expect another bad report on that. We don't expect any falling prices, that's for sure. What else do we have here on tap? The stock market had the worst week since September. This is going to be the start of the next down leg, in my opinion. We saw this up and down trend since January, lower highs, lower lows. All right, now let's switch up a little bit here. Let's talk about rising cost of living. Christmas trees are going up in price. A record year for Christmas trees. A survey came out. The majority of growers of Christmas trees, 71%, cited likely wholesale price increases between 5 and 15% compared to last year. My question to you, if you get a real tree, are you going to hold off on buying it because they're too expensive now? Or is this going to make you get a fake tree instead of a real tree? I've used fake trees for like 15 years. Reuse the same tree every year. The kids don't care. They just care about what's under it, if there's presents under there. Are you celebrating Christmas? I know a lot of you said you're going to be spending less this year for the holidays versus previous years. We did that survey, and it was over 60%, I think, if you of you said you're spending less this year. Question to you: are you going to buy a tree this year? Are you not? You're going to use the fake tree? Please let me know down in comments. But something else that's going up in price, really no surprise. The farmers, even the water bill is really affecting a lot of farmers here in California, but nationwide. And a big state for growing Christmas trees is Oregon, and they get a lot of rain up there, luckily. So hopefully their water bills won't make the farms go out of business up there. So interesting times, folks. Please let me know what you think down in the comments. The BlackRock warning a recession like we've never seen, and they're saying that what worked in the past will not work this time. So the rate cuts are saying are not going to fix things or make things better. The wholesale price index, what do you think about that? What do you think about the what's happening in Nigeria with the push to the digital Nigerian currency? All right, folks, we're going to wrap this one up. Get ready for a deep, hard, prolonged recession. If you're not feeling it today, I'm happy for you. I'm not really feeling it myself, but I think every one of us here watching this, including myself, is going to feel it at some point, because when so many people are broke and filing bankruptcy and so many job losses, yet on the other side of things, we've got rising prices. It's going to get bad, and you've got to be careful out there, because crime is going to continue to rise. And, just be careful. Bottom line, hope everybody's well. Please be on the lookout for the people that you love around the holidays. If you haven't talked to maybe an aunt, a grandmother, even an old friend, maybe get in touch, because people are having a hard time right now. More than one person that I work with has talked about how they had to take time off because of stress, and a lot of it's financial, a lot of it's health related, a lot of things going on, folks, in the world. So please be kind to people. Check on your loved ones, especially your elderly relatives. Check on your friends you haven't talked to in a while. A lot of depression happening right now. A lot of financial anxiety out there too, folks. So I hope everyone's well. Big hugs to everybody that's watching. Thanks for being here. Bye for now. Keep stacking, and peace.